2023 is starting off with what could be some of the best deals on dividend stocks we've seen in years. The slow bleed of the 2022 stock market has made otherwise solid dividends insanely cheap. A few of these stocks have dividend yields above 10%, and one of them even has a yield above 20%. While they may be cheap now, they might get even cheaper depending which way the market moves this year. As always, these are not recommendations nor financial advice. Do your own research before you invest. First on our list is a company that pays consistently growing dividends, but is still considered a growth stock for the amount of capital appreciation we've seen over the years. Last year, they lost over $50 per share in price, but that hasn't stopped their dividends from continuing to grow in spite of last year's bear market. Current dividend yield for this company is 0.71%, including the supplementary dividend in December. This first company is Apple, ticker symbol AAPL. Speaking of tech, next on our list is an ETF that's on sale. Thanks to last year's bear market, it's trading at a discount of more than $130 per share. It also pays a dividend that continues to trend higher year over year despite the drop in price. The current dividend yield is 0.99% with an expense ratio of 0.2%. This ETF could drop even more this year, but judging by the price action on this chart, you could tell it's still a great deal even right now. This ETF is QQQ and it tracks the NASDAQ index. If you want to buy all tech stocks at once, this ETF might be an option worth considering. This next company is a well-known software company. While its share price has dropped over $100 per share in 2022, it has a dividend yield of 1.13% as of closing December 30th, 2022. They've also consistently increased their dividend every year for the past decade. The stock is Microsoft, ticker symbol MSFT. This master limited partnership has a dividend yield of 15.79% as of closing December 30th, 2022. It's a conglomerate of companies, think Berkshire Hathaway but smaller, and those businesses are in the investment, energy, automotive, primarily parts sales and maintenance, food packaging, real estate, home fashion, and pharma sectors. While they were only profitable for one of the past 4 reported quarters, their dividend hasn't been cut in 10 years. It has remained a consistent $2 per share per quarter for the past 16 quarters. This stock is Icon Enterprises LP, ticker symbol IEP. Next on our list is a stock I'm personally invested into at the moment. It's a covered call ETF with a dividend yield of 16.93% as of December 30th, 2022, and an expense ratio of 0.35%. This ETF tracks the NASDAQ index, buying all the stocks on the index and gaining additional income from buying equity-linked notes and distributing the income from those notes to investors. This ETF is JEPQ, offered by JP Morgan Chase. If you're looking for a less risky asset to invest in, U.S. Treasury bonds are about as low risk as you can get. There's an ETF that invests directly into 20-plus year Treasury bonds and another ETF that buys that bond ETF and writes cover calls against those shares. As of closing on December 30th, 2022, its dividend yield is around 18.03% if we only calculate with the most recent payment as the dividend for all 12 months of the year, and it has an expense ratio of 0.35%. Despite the underlying asset being relatively stable in value, this ETF has seen a drop in price, nearly testing its all-time low. This ETF is TLTW for iShares. Last on our list is a stock that's on sale right now. Its dividend yield as of closing December 30th is 22.66%. Its dividend has been a consistent 52 cents per share quarterly for the past 7 years. Even during the initial pandemic crash, this dividend remained consistent. Despite economic headwinds, they're still profitable and beat their earnings expectations for Q3 of 2022. This stock is Not Offshore Partners LP, ticker symbol KNOP. If you like this video, you might also enjoy this one here on the screen. Subscribe and hit the bell for notifications so you don't miss a single video. As always, this is not financial advice, nor do we make any recommendations. Do your own research before investing.